Well, welcome back, my passive income investors alike, to a live Canadian's perspective on investing in stocks, crypto, and just about everything else in the market. Today is just going to be an in-depth Q&A. This has been one of the most wild weeks, just from a company standpoint, from a YouTuber investment standpoint. And my goodness, took a little bit of a break here. Had my buddy's wedding yesterday. Man, we just got back from the beach. And I'm looking forward to just winding down here and having a wonderful conversation about just how I go about investing from the Canadian standpoint, because I've had some fantastic conversations with people at this wedding that are highly into crypto mining. I got really big into those topics. Tesla's been a topic of choice, obviously, amongst our chat group. It's just been unreal, right? Especially with these YouTube stocks getting destroyed literally up till going into this weekend. But I have been fortunate enough to continually have my portfolio hitting all-time highs, and I wanted to touch base on something that I haven't done in a little while, and that is actually talk about my personal finances. A lot of you have been calling me out because I used to do monthly income and expenses, and when you're in a position of a job, it's a little easier. We'll get to Vegas soon. Don't worry, Vegas is coming, Vic. We were talking about it today, actually, with my uncles are travel agents, and that we get right down to those traveling topics. But with this topic of talking about personal finance when you're running your own business, you got to be. It's getting kind of hard to deal with, especially to sit down and try and talk about it in a manner where I'm not giving too much insight, because I'm at a level where I'm consistently pulling about like a four-figure income a month right now, which to me is relatively staggering, because in my entire life I've never made more than about 40 to 60,000 a year, which should prove that anyone can build a portfolio off little bits of income. However, like I said, just because we're working with so many agencies, I'm paying employees, I've got a lot of moving parts. What I'm going to try and do is generalize the numbers a little bit so I can give you guys the insights into the business. But I used to literally tell everything about like where I'm making the money from and how I'm my expenditures with that. And I wish I could just be like, hey guys, here's exactly how my business works from top to bottom, so you all can replicate it. But I just, it's too hard for me to do that right now without causing vulnerability to my business. So I want to be a little cautious with how I go about it. But when you pair that income with the growth of my portfolio, like this chart behind me here, actually, I look at it and I can't believe it when I look at it. Now you probably can't even see it on the video there, but basically the last month my portfolio was worth about 307,000. Today, when I calculated it going into the weekend, we were sitting on about 327,000 after taxes. So that's showing a growth rate of about $20,000 with contributions plus growth this month, which is just, I don't know. Like I said, this is stuff that I knew when I got into investing was an inevitability, because this is what people tell you about compounded effect of constantly contributing, seeing those growth rates. So it's just a marvel when you actually start seeing a long term. I'm several years deep into this now, and it's actually starting to do the real big snowball effect. Shamir, good afternoon, Kyle. Recently sold my Canadian ETFs to cut out the duplications in my portfolio and looking to reinvest the proceeds into REITs, especially where the entry point might be reasonable. I would have to ask you, what REITs are you buying, good sir? Because I find most of the Canadian REITs are almost exactly the same, like RioCan and something like a Smart Centers is like paired together almost. But I try and look for diversity in my REITs. So, I mean, I got RioCan for my Canadian exposed Toronto real estate, which I love, backyard. I got MPW because I want exposure to medical properties. And then I also got, which I wish I loaded up on. God, one of my biggest regrets, not buying more Stag Industrial. But because those are so secularly different, I like not having all my real estate just exposed to, say, just residential or just commercial or just something like malls. What's your opinion on Sony stock? Not a stock I look too deep into, but Sony's been around for quite some time. So yeah, Sony's interesting because they're getting into a lot of stuff right now. I've seen some of the stuff they're getting to. Mix of the retail and industrial, and have the healthcare. Yeah, if you want industrial, man, the Canadian version of Stag, which is doing just as good, is what is it, Dream Industrial, I think, which is encored heavily by Magna, which Magna's been a relatively great company. I mean, they're building a lot of these. Actually, Magna's responsible for many of, I think, the electric motor parts that all these other, like a lot of these auto manufacturers are using right now. I'm actually impressed at the scale and the scope of Magna. Actually, I know people that, I can't say anything because I know people that are relatively high up in Magna to some degree, people that deal with a lot of the logistics and back end of their business, and they're trying to refine it down to make supply the supply constraints and just make it so like parts can move from one warehouse to another seamlessly with some new upgraded software stuff. I can't talk too much because I imagine most of that is under wraps, and it's not something that person I'm sure would be highly glad if I just started leaking what Magna's doing. Are SPACs dead? No, absolutely not. This is a big debate, and actually, thanks for bringing this up because this is something that I think is prevalent to talk about from any perspective, Canadian or not. When it comes to SPACs, small caps, the Dow Jones in the perspective looks like it's trading up to some degree, but when you look at the PE ratio behind the Dow, it is trading at absurdly reasonable levels. Actually, for the first time in history, I think in a long time, speculative stocks are actually trading at really decent valuations. I mean, a lot of the sponsors and people that we work with are relatively small caps, and I've noticed that a lot of them, gold companies, exploration, tech companies, all of them across the board. I mean, even if you look at somewhat mid caps, small caps, Corsair, Wish, all of these companies. Now, some of them, don't get me wrong, not better than others. Wish is having some issues, obviously, with their bottom line, but Corsair just crushing gaming, and people are trying to figure out why they're dropping so much. And I know people like Jeremy from Financial Education has been doubling down here. But if you want real value in the market right now, if that's something that you think you can pair up for long-term investment, it doesn't get better than this, especially in the SPAC market. When you're looking at things like SoFi, God, the SPAC market got hit so hard. And in the beginning, it was insanely overvalued, but it's impossible to say that these things are actually trading above. A lot of these things trading above like their value. Most of them are literally below fair value market. And when you look at the S&P top 10, right, like that's where I think a lot of the money has been shuffling into, especially when you looked at Microsoft this week. Like, oh my God, over $300 a share, right? So I think people are pivoting that money into those, but I think there's good reason behind this, as we have discussed, which is the fact that these small caps don't have near the exposure or the growth capability that something like a Microsoft that's going to have, you know, tens of hundreds of billions of dollars in bottom line year after year, and that they just raised their value of their product by like $1. It's going to add hundreds of millions to the bottom line because of these supply constraints, right? Whereas these smaller companies that are dealing with all these logistic problems and the shipping problems in China and all these other places, these large caps can actually like go above those problems. And if there's nothing that is more true to that statement than Apple, than Tesla, I mean, these companies have the capability to vertically integrate their own products, and that's what they're doing from the ground up with, you know, Apple's M1 chip, and then you got Tesla coming out to build Dojo with their own vertically integrated chips. So, I mean, when you're looking, it's a tough debate right now that I have in my head, because I mean, like, obviously I want to buy small caps because they're just so at fair value here. But at the same time, like, the reason that a lot of money is shifting out of them is because they won't get the same kind of traction, and they don't have the same, I want to say, like the same just fluid and just optionality behind like their business decisions. Question: Ray Dalio sold off some of his SPY to buy value companies like McDonald's and Walmart. Should I slow down on VOO? Absolutely not. VOO, I just bought VOO. This is one of those things that I've never really owned. I'm not a big fan of the ETFs, but it's just too hard to deny what's happening and how they've structured them, because they're all weighted in those companies that you want to buy anyways. And honestly, Walmart, this is the problem with Costco, Walmart. A lot of these companies like McDonald's is that their growth rates are limited at this point. Like, I could easily see how a Tesla or an Apple or a Microsoft doubles from here. I don't know how a McDonald's or a Starbucks doubles from here. I'm not that in depth into those businesses. How does a Walmart or a Costco double from here? Their businesses are incredibly foundational to society. For long-term dividends, it's great, but for actually looking from the business standpoint and saying, hey, in the next 10 years, how does this company do what they've done and double it into doubling or tripling my value? And it's hard to recognize, especially now that, you know, Amazon is considering getting into retail. That was a shock. A company that spent their whole life trying to avoid retail is now going to be building retail warehouses to compete. Kyle, BABA or not? BABA is a tricky business. I own it in my mother's portfolio, and yes, it is getting destroyed. It is the worst holding I have in her portfolio, and it's another one that I have this constant debate with. Actually, Brandon, what's that channel's name? I think his name is Brandon. He's a Canadian guy, and he does videos with his dad all the time. He did an incredible argument video with his dad talking about Tesla and BABA, and because he's like, his dad's a lot older kind of styled investor and sees a lot of the risks with those kind of companies. But my God, the arguments those guys brought to the table are really great arguments. There is risk with BABA, obviously, when you're talking about the ADR market. But I don't, and Brandon's argument was that, I don't think China wants to destroy these companies. I don't think they want to destroy the ADR market, even though there's obviously secular risk to buying things because China doesn't really allow you to just buy into their companies from a Chinese stock exchange. Like, you actually have to buy them through these ADRs, as they're called. I can't remember the exact full length term of that, but they're buying through like third parties that are based out of like Swiss accounts or something. It's really convoluted. I wonder if Brandon is adopted. Yeah, he doesn't look like his dad, but I'm sure his mom's maybe got some Asian in her. We're Canadian. I mean, Canada's a really diverse culture, so when you see people's kids, it's kind of like, well, what parent do they come from? Good job on making YouTube a career. Yeah, thanks, man. I don't know. I won the lottery here. I'm super blessed, for sure. I'm hoping it continues. If I can get 2 or 3 years out of this career, I'm happy. That's that'll be enough that I can go get an Uber job and know I'm going to be okay at least for a little while. What do you think about Tim Hortons, aka Restaurant Brands Inc? I hate Tim Hortons, not a fan of it at all. Expansion over 1,000+ locations up in China. I would love to see how they go about doing that, because Tim Hortons is one of these companies that could never expand like Starbucks could. They've had a hard time getting out of the Canadian market. They're primarily in the northern U.S. I know a lot of U.S. citizens that don't know what Tim Hortons is. It's literally like it's like Dunkin' Donuts, but the Canadian version. They've done pretty successfully in Buffalo and some of the northern states that are closer to the Canadian border, but they have had a hell of a time over the last 5 years, 10 years, expanding that business from where it currently sits. I do not like it personally. I mean, I go to Tim Hortons once in a while, but I don't like them. I don't like the coffee. I don't like paying a huge if I'm going to pay a premium for coffee, I might as well get Starbucks, because at least I know it's going to taste good. Because Tim Hortons coffee is just like, it's so bland, man. I can buy better coffee. Like, I love going to Costco and buying those organic beans that, like, they're so good, man. You get the flavored ones, the hazelnuts, you homebrew that shit. Oh God. It's so much better for like half the price. How do you think the Jeremy and Meet Kevins of the world will perform if we hit a bear market? Their portfolios are hyper growth. So look, Jeremy's making good calls. I see. This is the problem that we were discussing on our Friday live stream. When it comes to these guys, and I watch them aggressively, I love them. I'm sure you all do. Graham, Steph, Meet Kevin, Millennial Money, absolutely love it. But when it comes from an investing standpoint, I have to agree 100%. Even though I don't follow Graham Stephan's investment philosophy that much, I truly believe he has the most foundationally robust portfolio out of all of them. Meet Kevin tries too hard. He does what I do. I love talking about stocks every day, but sometimes that gets to your head and you start trying to think you can predict crashes and these secular movements. But like, sometimes you have to be aware of your own ignorance, and it is damn near impossible to be an economist. It just is. It bothers me when people try and make these foundational statements like, hey, I'm just going to stack a lot of cash because something's going to happen and I want a deal. And if not, so be it. And then just try and find every way to justify that train of thought. But then you go to listen to someone like Cathie Wood, right? And Cathie Wood's completely on the other side of the fence than what Meet Kevin's saying. Well, I mean, Meet Kevin has good points, but, I think Cathie Wood looks at the broader picture against people like Michael Burry. But then you go to the other spectrum with somebody like a Jeremy, who's like a tried and true value investor. Like, as much as people think he's a growth investor, I think he truly looks for value in companies that have explosive growth. And there's nothing wrong with that. But in this market, it's just crazy how, like, the tried and true method is what is making people rich. Index funds, these top 10 companies, there's the boring stuff. Like, no one talks about Apple. Anytime I post an Apple video, it'll never get views. Facebook, sometime hit or miss. Yeah, Tesla's really exciting, hype beast kind of company. Sure, you can get views on that, right? But nobody, and that's kind of what bothers me about Jeremy too, right? Like, I don't know if Jeremy holds Apple anymore, but I watched Jeremy long enough to know when he was like deep into Apple, going heavy into it, it's exploded. He said, forget this. I'm done with this company. Too expensive. I'm out. And then he never talks about it anymore. But clearly Apple has proved themselves to be an incredible growth driver still. And yeah, they're expensive, but they're proving that value for now. And since he sold out of Apple, when we're going years back, it has tripled in price, right? So it's the same thing. Like, these companies just have such a foothold that tried and true method of just buying the indexes, making sure you're weighted in these companies that have all the money, all the potential, like, and then maybe start focusing, like, because that's what I've always tried to hinge my portfolio on, right? Was like these foundational large caps, and then I would basically use small cap growth companies like MindMed, like Canopy, like Tesla, to take those big gains and continue diversifying into the large. I mean, Tesla is responsible for me adding Clorox, Johnson and Johnson, and Pepsi to my portfolio. If it wasn't for Tesla, those 3 positions would not be in my portfolio right now. So, I mean, that's what I think a lot of people underlook because they always try and make a big chunk of capital. They take it and they try and do it again, and then they have one bad decision, and that could be anything that's in the market right now. I mean, SoFi, Wish, these companies are down 70% from their all-time highs. That one decision took back a good chunk of those gains for a lot of people, right? So, I mean, it's kind of hard to forget when you're gambling. And I don't think people understand, like when I was buying MindMed, that kind of risk that I was taking on. And that's why you have to always make sure your risk adjustments don't go above your emotional tolerance. And this could be said for Tesla, right? Like I am a diehard Tesla fan, right? And I would love to make that thing 50% of my portfolio. Like I'm ready to do it now. But like you have to understand that shit comes out of the woodwinds. That stock could drop in half. It's overvalued. All this stuff. You could say whatever you want, but like it doesn't, none of it matters. At the end of the day, like it doesn't matter what bear case you have against any company. Something can always happen. A pandemic can always happen. Something can always come out that can destroy the fundamentals of that business. And this is something that I see right now with things like MO. I've talked about this aggressively because I'm extremely ashamed with their management. Their management skills have gone down in the toilet. I have no respect for the management anymore. And when I look at something like an MO, it just reminds me of like the airlines. I mean, the airlines thought they had this foundational business that could never be disrupted. So they thought, hey, CEO raises, hey, share buybacks, hey, dividend increases, yet they don't follow the fundamental rules of do you have enough cash around to survive a tragic event? And clearly they didn't. They did not have enough cash to get through 3 months. They have literally lost as much money quarter over quarter as they could make in a whole year, and they've locked themselves into losing out on 10 years worth of gains. And anybody that's bullish on the airlines can only be trading the technicals of the stock, because to be bullish on the companies at this point is foundationally stupid. And it's the same thing with MO. That management reminisced to me so much of the airlines. So share buybacks, dividend increases, CEOs getting raises, yet the friggin' foundation of the company is eroding aggressively. At least the airlines had growth behind them. But I mean, they hide it through numbers. Like they make when you do shit. This is a really good thing to understand when you're looking at companies. Any company that does share buybacks, like Apple, you have to understand how that reflects onto the earnings per share every quarter. Because if there are less shares available on the market, if your earnings are slightly lower on an EPS level, they will be higher, because there's less shares to compare the amount of revenue you've made to in that quarter. So a lot of companies can bullshit their books by buying back shares off the market, even though their numbers might not be as good as they once were, right? So it looks like they're hitting their targets, when really, if you went back a year and took a look at the float that was there, it might not be as clear of a defining picture into their future revenue, right? I feel like the US dollar does well while the VOO goes up, then you capital and currency gains. So look, this is a Canadian perspective 100% right here, okay? Because US people, they live in this little bubble and they never take currency conversion into the value of their stocks. And this is really troubling to me, because like this is one of the primary factors that has been making my portfolio hit all-time highs, is that the US dollar has been rebounding this month. And what that does for me is, because my US assets all in USDs are going up in value. If I sold those stocks today, I will get more USDs for them than when I bought them. And this is something that if you had $1 million, if you just sunk $1 million into the market, into bonds, in USDs, whatever, going into the crash, the US dollar dropped 10%. But you rarely hear people take that into consideration when they value their portfolios. Luckily, I don't know. I'd love to see some of these US accounts, because I never see it on Robinhood or M1 Finance. But every Canadian account I have calculates the dollar exchange, whether it's Canadian or US. So when I buy that asset, that stock, it separates me now from the dollar. Now, whether the dollar goes up or down debates the value of the dollar I paid for that stock when I sell it, whether the stock goes up or down or not. So it's a fascinating factor to investing that just way too many people, I think, overlook, and it's not a conversation that comes up enough. I figured this out really early on in my investing career, and I vouch to always make sure my portfolio is about a 50-50 pair. So 50% Canadian dollar companies and 50% US dollar companies. And my God, has that yielded insane results for my portfolio. Because again, the Canadian dollar over the last 10 years has dropped like 30% value against the USD, even still in this market. We had the Canadian dollar come back with a vengeance when the US dollar dropped, again, benefiting my portfolio and offering more stability, because again, US dollar is volatile and the Canadian dollar is not. You're going to see that balance out against each other, which I love. It's a really tricky business. When you get into the full scope of investing, there is a lot of factors, a lot of technical factors. But again, you don't have to complicate it that way. Excuse me. Like just buy a VOO or a VFV, which is the S&P 500 in Canadian dollars. Like, if you can take these into consideration and pair your portfolio where you get those large caps, and then that's when I would recommend doing what Jeremy's doing, right? Like, start, get your foundation built out, and then start maybe taking a little bit more aggressive statements. But this is for people that have money. If you're new to investing, I don't recommend doing any of this stuff. Like, this conversation I'm having is from a very broad scope, somebody that has a large chunk of capital, 20, 50, 100,000 to invest. Because if you're brand new to investing, none of this shit matters. Like, if you got $5,000 to invest, guys, like that's so incremental. And if you want to do a passive style of just buying an index fund and do that consistently and not think about it, that's fine. But for me personally, if you want to be deep in this, I would take that $5,000 and really core focus into maybe like 2 or 3 positions at most, because $5,000 won't go far enough if it's too broadly spread. But again, if the VOO just goes up 20%, I don't think you need more than that personally. My favorite Canadian. Why? Thank you, Lord Slade. I have a lot of favorite Canadians. I got a lot of favorite people out there for sure. There's a lot of good Canadian investors. I feel like the Canadian part of the YouTube community is so underrated. I've noticed that Graham Stephan has been getting some of the bigger Canadian guys on his coffee hour or whatever it's called. But it's so crazy to me because Canadians have such a much more kind of global perspective, especially in Canada, because Canada is a much more diverse country than the US. I mean, the white person's a minority here. So I just feel like the perspectives you get on international investing and how you kind of look at foreign companies is a much more broader view to some levels. Not saying that I'm that smart at that stuff by any means. I mean, but I feel like there's more perspective here than I get out of a lot of the US YouTubers, because I never hear me, Kevin, mention currency conversions or Forex, or same with financial education, right? Like, I've never heard Jeremy once say, "Oh, the USD is down 10%. Oh God, my $10 million portfolio is now only worth 9 million." Like, that's not a statement I've ever heard those guys mention once. Brandon Beavis. Yeah, Brandon Beavis. That's who it is. And Daniel Pronk are good along with yourself, Kyle, of course. So I appreciate that. Yeah, I really recommend you guys go watch Brandon Beavis and his dad. Like, that the perspective those guys can bring to a table, I think, is absolutely commendable. Common Sense Investing, best channel. Yeah. I'm not always common sense. I mean, I shuffle my portfolio around a lot more than I'd like to, but I mean, my perspective is moving, and sometimes I'd like to think that I'm making mistakes, but hey, the chart keeps going up. If the chart keeps going up, I'm going to keep kind of just doing things in a very, slow paces. Because I held MO for years. Like, people don't understand, like, I'm making these moves, but these moves aren't things that I just take lightly. Like, I'm not finding Corsair and just buying it, and finding SoFi and just buying it. Like, I mean, it takes me a long time to make an investment decision. Like, this I don't take this shit too lightly, because it scares the crap out of me, right? Like, investing still horrifies me. When I lose money, I cry inside. Like, it's not fun looking at my mom's portfolio and seeing BABA down $4,000. Like, I mean, that cringes me deeply inside. So when I make these financial investment decisions, some like MindMed I knew about for a year before I even bought into it. A lot of these companies like Tesla, I've been in since 2019, in and out of it for that. Most of the companies I own right now, I've already been in and out of a little bit more than once, typically, depending on where the range of their business and the scope of my intelligence behind that business, right? Because what a lot of people don't understand either is sometimes, like, you hear a news article and think you should sell it, but like, you're probably not listening to the conference calls. You're probably not looking at the trajectory of the business, and you're probably basing that decision on something that is not factual. And I really hate, and this is something I do, so I'm kind of like speaking from a terms that aren't really appropriate, because I do this a lot too, is clickbait, right? There's one thing that my brain has come to associate is I do not take anything from Bloomberg or any of these companies at face value anymore. It is damn near impossible. Like, for example, OnlyFans. I can't get over this headline. It drives me bonkers, because everyone's like, "Oh, OnlyFans is banning explicit content. It's all over for that. No more nudity." That's not what they're doing. They like acquired a business, and they're going to basically make their own version of Patreon for clean content, but they're still going to have the explicit side of their business. Their whole fundamental business is based off of that, for Christ's sakes. Yet every friggin' headline is, "They're banning it. They're banning." It's like, no, they're just transitioning into a new model so people can run YouTube channels and use OnlyFans exactly like a Patreon. That doesn't mean they're banning the other half of their, like, I just don't understand these headlines anymore. And then you have to read into it, and then you get like 4 paragraphs down before you actually read the quote, which usually it's like a 1-sentence quote that has been pulled out of like an investor relation page, right? That has been highly opinionated 9 ways to hell. I mean, Tesla's been a great okay, like, I don't want to keep ranting about Tesla. I just can't get over the AI event that happened this weekend. It was probably my favorite Tesla event I've ever seen. But in 2019, it was the same thing. It's like Tesla's core fundamental trajectory of their business was so disconnected from anything you would have read on Bloomberg. And then guess what? Stock went up and everyone changed their tune real quick to look good. Oh, we're going to raise the price target. We're going to raise the price target. And now we're in like this whole new mode here where it's nothing like 2019, yet people still say the same shit. Like, it's just like nothing ever changes in the market that way. I don't think. I think it is getting worse, however. So like I always recommend no matter what, no matter even my videos, don't take anything I post out here for face value either, guys, because I don't. I can say stupid shit. I'm talking off the top of my head. I got no pieces of factual paper here, right? Always just go to the investor relation page. That's it. It's not rocket science. There'll just be a one little article that'll be shorter than the Bloomberg article you're going to waste your time getting sucked into, and it'll really tell you what you need to know. And then what you do is you figure it out on your own, come up to your own opinion, and then read those articles. And you'll find that your opinion usually 9 times out of 10 will not align with half the shit these analysts talk about. Because analysts are interesting. At the end of the day, Kyle, actually, let me read through some of these real quick. Sorry, guys. Thoughts on MyMed? My girlfriend holds MyMed. I still hold MyMed for my mom. I update you guys a lot on this one. MyMed, to me, it's just like any drug company. I'm ashamed that JR is gone. I think there's some problems going on with the CEO and some of the management, but luckily for pharmaceuticals, none of that matters. Here's my prediction with MyMed. Let's do a prediction game. Actually, this will be fun. I'm going to make really bold predictions right now about where I see 2030 being, which, by the way, is only 8 years away. And trust me, those 8 years are going to fly by, baby. But MyMed, sometime in the next few, maybe, I don't know what years, but we're going to scale the scope down. Everything that I'm making predictions on will be between now and 2030. Okay. MindMed, I bet, is going to get bought out sometime around phase 3 trials. If they don't get bought out, there will be offers, and if not, partnerships. I can almost guarantee that. Can't guarantee anything, obviously. There's no guarantees in life. Could drop dead tomorrow. But I'm highly, highly confident that every pharmaceutical sector that I've looked at, and I've been lucky enough to work with a lot of them from a sponsorship level, what ends up happening is they truly have a foundational new drug. It's crazy how much people think that big companies like Apple or J&J are companies that can just copy every other company. They could just copy Tesla. That's a business model that can be ripped off. It is not that easy. And especially in pharmaceuticals, because you have to go through phase trials and then you get patents. So if you're the first one to the gate, you're the first one with the patent. This is something that J&J, Pfizer, you don't see them really pushing, psychedelics too much, except for the few little drugs that they are using, I think, in the ketamine sector. So when these companies prove out these technologies, and I've seen this happen a dozen times, by phase 3, they get bought out. And usually what I've seen, and again, don't take this for face value, what ends up happening is I find that MyMed has been on the same track as all these other companies. They get up to about $1 billion to $3 billion valuation. And when they get bought out, usually they get bought out at a market cap of about 10 to 15 billion. And this is something that I keep seeing again and again and again. So I'm really confident that if you're looking for high risk, that MindMed still has that true capability. Now, there's risk. It can belly up at any time. They're burning through all your capital. They don't make any revenue, but that's the bet. The bet isn't the company's going to make money. The bet is that those drugs are going to be extremely profound. They're going to prove it on paper, and then big drug companies won't have a choice but to pay attention to that sector. That's my bet. Let's move down here. Why don't you own Canadian ETFs like VFV? I used to own VFV. But like I said, because I'd rather keep my money directly in USD and collect US dollar dividends, I like just owning VOO. For those of you that don't know, VFV is the Canadian dollar version of the S&P 500. It's still the same S&P, same 500 companies, same weightings, the whole 9 yards. It's just done in Canadian dollars. But it's not a bad thing to own. There's nothing wrong with it. I got nothing against it, except I think the fees are a little higher, but I mean, it's purely based off preference. Do you always read the MDMAs when you're looking at financial earnings for? I always CEDAR filings. That's the only place you can go, right? Like, it doesn't take long to read a balance sheet these days. Still looking at Philip Morris. No, I like Philip Morris a lot more than I like Philip Morris, British American Tobacco, but I don't like them enough yet, because people have to understand that the fundamentals of these businesses have changed so much that they're not what they used to be. And the problem that I have with that is people don't understand the risk they're taking on with these giants. These things used to be foundational aristocrats, but now they're proving they don't know how to expand very well. I mean, MO has flopped on every billion-dollar business deal they've made, and they've been nothing but write-downs. And I think it's a poor amount of these guys are supposed to understand litigation and understand the drug market. Clearly, they do not know it as well as they made it out like they did, or they wouldn't be paying friggin' hundreds of millions out in litigation and losing billions of dollars from Juul and watching Kronos Group. Like, again, these are companies I'd never owned. But in the beginning, when I bought it, I was like, damn, these companies are on the forefront of the MJ market. They're on the forefront of the vapor market, and they're not. They're all private companies are dominating those markets right now, which is really fascinating to me because the best-selling vapes are not owned by any major tobacco giants, all private companies. They are getting a foothold, but I need them to prove that shit out before I'm comfortable. I have no problem coming back to them later, but I don't want to own them when I know for certain right now they're a sinking ship. And if they don't change quickly and they don't see fundamental growth from these other businesses to surpass the loss of smokers, which again is accelerating at a compounded rate, that's something that these managers don't focus on highly enough. If you look at the rate of decline in smokers, it is accelerating at a compounded rate. It is not slowing down. Like if it was peacefully like a 2% a year thing, I'd get it. I'd be like, fine, but it's not. It's like 5+%. And that gets scary, especially when you look 5 or 10 years out when you're going to see a 50% loss in smokers. But again, that could change too. I don't know. But right now it's too risky. I bought CDR on Amazon. Very nice. Very nice. Thanks. Cedar on most advanced websites, 1991. Yeah, everyone uses Cedar filings, right? I mean, when I figured out what Cedar was, when I say Cedar, I swear most investors' eyes blank. I don't think people understand what Cedar is or how it works. I'm like, Cedar is the go-to place for usually small cap or mid cap stocks that are releasing filings, and they usually do interim financial reports. A lot of small caps don't have to post quarterly reports. What they usually do is post quarterly statements as news filings on their website, and then they do interim financial reports where usually about half a year or so they'll actually release where the business is at. VOO versus QQQ, which one? Switch, I get it. I like both. I would honestly own both. I'm thinking about buying. I used to own QQQ. I'm actually thinking about buying it back in my corporate account because my corporate account is only focused for growth. Because my business, the primary purpose of my business is to grow capital. I don't want to own a lot of dividend stocks in there. I just want pure growth, but where I'm most likely to get it from. And QQQ, I mean, you get all these companies I love. I don't love PayPal that much. They're a huge profit driver, but I don't like how much they charge. But still, they're in that top waiting for the QQQ ETF. You're going to get Nvidia, Tesla. You're getting all these crazy awesome tech companies that are by God knows are going to be forefronting the future. So I mean, I love QQQ. If you're actually risky, you want to take on some risk, TQQQ. Triple leveraged. My boy Matt Money's big into the TQQQ. I actually like it a lot. It's not something that I'm not fundamentally on like taking that amount of risk because to me, I don't know. Matt's got a lot more money than I do, first of all. So for him, it makes a lot more sense. For me personally, I just like getting that growth. If I can get 20% a year, you're going to be retired in 15 years. 20% is all you need. If the markets keep sustaining that and you're consistently putting away those minimums of, 1,000 a month, like you're easily retiring in 15 years. No doubt about it. I overweighted myself a little buying ARK, and now it's 30% of my TFSA and other 70% VUN. Do you think I should realize some losses on ARK or just hold? That's a toughie. That is a big toughie. I really like the ARK genomic funds, but these are things you're buying as speculative investments. So when they do pull back, you kind of have to understand that it could take some time for money to shift back in there. And unfortunately, we're in a market right now where money is just shifting into large caps. It just seems to be the way it is. How long this lasts, I don't know. But like Jeremy said, at some point in the future, I wouldn't be surprised to see a secular shift back into small caps because the values make more sense there. Oh, make sure people stomping around my door likes to open up. The office door here, baby. Did you see Tesla's teaser on their new thing release? Maybe the stock goes up on opening tomorrow. So look, Tesla's stock. Okay, so this is the problem with investors on Tesla. This is the argument. This is the fundamental argument that we've been having a lot in our chat groups, and it's kind of frustrating a little bit. Tesla is a company where if you look at it for face value, it is exuberantly expensive. Same could have been said with Apple or Amazon 5-10 years back. I mean, Amazon was trading the 400 PEs. I didn't buy it because it was so expensive back in the day, but that's where the ignorance at play comes in. Because again, if you can put aside valuation, you understand the risk that comes with overpaying for something like that, but then you go look at the fundamentals of the business and you look at what Tesla's doing, it's so hard to grasp that even the Tesla hypesters out there and the community like have recognized the scope and the complexities of what the company's doing. And it's just like you can't even wrap your head around it in one sitting. So it's really hard for an analyst to make a base argument that makes sense, like Michael Burry when he's just like, oh, I'm sure Tesla's too expensive. It's like, yeah, but the ecosystem is so vast at this point that like I start thinking that their valuation makes more sense. They're like one of the only companies vertically integrated in batteries from the mine to the shelf. They're the only company that's vertically integrated in chips now that they're going to use to build Dojo from the mines to the shelf. Their cars are going to be, and this is the crazy thing too, right? Like people when they hear self-driving, and this also frustrates me a little bit, they think that what Google's doing is the same. They think what GM is doing the same. They think fundamentally that these operating systems are exactly the same. Yet people don't even realize that Google has to put in sensors in the actual road. Like people think that all of like Waymo's self-driving technology is in the car, and it's not. It's actually on the streets, some of it, to make it more fluent and actually work. That's what I keep saying when I say that the technology is use case specific. And I don't think people understand what that means. Use case specific means that it can only operate in one specific circumstance. And yeah, it's great that you can drive a truck down a highway and it can go from one end of the highway to the other end on its own and you can drop stuff off. That's fabulous. That's amazing. But that isn't real world AI. Tesla's building a machine that can recognize its surroundings and make self-propelled decisions based off those surroundings in any circumstance. Whether there's a lake, whether you're parked in a garage, the car can recognize what's going on and make judgments based off that. And that's why Tesla is ready to evolve into more higher end robotics, because that technology can easily be implemented into an actual humanoid robot, which is clearly the direction that none of us saw them taking. But it really proves that that is what Tesla's becoming. They're becoming an AI, and they're up there. Like I said, you have to own the AI companies. This is something I can't state enough. I state it a lot. I'm a broken record about it, but I swear to God, if I go down into my grave, there's one thing I want to be said that guy got that one right. It is going to be the future of AI and how it is going to disrupt every business. And if Tesla's AI event didn't prove that, when Elon's like, well, eventually, and again, we're not talking 5 years down the road. Honestly, by 2030, I think people are going to be really rattled by where Tesla's going to be. I think they're going to be really quickly understanding why Tesla's worth, $500 billion. But it's risky. Tesla could drop in half tomorrow. Honestly, at the valuation, it could, but I just can't get past the business. There's no business like it right now. It's just unbelievable. So putting that aside, WS expands their list of fractional shares purchase. I think Canadian Imperial Bank is the first Canadian bank to finally introduce fractional share buying. I think I'm not sure if Wealthsimple offers fractional shares right now. But yeah, it's the shame. Canada doesn't have fractional share buying until like this year. It's God, I hate it so much. That's the problem. I wish fractional shares existed when I started investing, because now I don't invest less than like a couple thousand at a time, or 1,000 at least at the time. So like fractional shares mean nothing to me anymore. In fact, I don't even want to own fractionals. If I can't own like 10 grand or 20 grand worth of a company and feel confident putting that much money into it, I don't want to own it anyways. It took me a long time to get to that level with Bitcoin. It took me like 7 years. Like the reflection in California roads, snow plows will kill those in Canada. The reflectors in California. Yeah, so this is another interesting thing with real world AI. I think, like I said, you guys, if you want to argue the Tesla stuff, man, watch the AI event. Like these robots actually just work like you do. When you're driving and snow flies off a car and it blinds you, and you're like, okay, well, I'm going to presume that car's still moving, so I'm just going to take it easy here and just see what happens. Like they're literally building it out so these things think for themselves. And the craziest thing about it, oh God, I know I'm going down this rabbit hole again, guys. Tesla has the most data sets out of all the other companies by like fivefold. Okay. Google's the only one second in command when it comes to building out their self-driving. And even Google, because I watched the Google and Tesla AI day and them talking about where they're both at with their head engineers, and they both agreed they need more data. They do not have enough data. That is the only thing holding them back, is compute power and data. They know that for a fact. So Tesla realizes that we're never going to have enough data, because in the real world, there's not enough accidents for this thing to figure this shit out. So what they're doing is they're having hundreds of people build out real worlds into a video game, like real driving roads in a video game, and they're making the AI play the video game, and they're forcing circumstances against that AI, like accidents and all kinds of stuff that don't happen enough, so the AI can figure out what's going on when the car spins out of control or has somebody kind of comes into a head-on collision or something. Like, I don't think people understand the profound nature of what is truly happening with Tesla right now. And I think I think it'll come into fruition easily by 2030. And people are, like I said, are going to wake up to that. I think you'll go with QQQ over Amazon. Yeah, I like Amazon a lot because they're one of the companies forefronting AI. I actually look a lot at their AI technology and what they've been doing with it. And Amazon, their business is scary and just interesting at the same time. Same with Apple's actually. I find these companies kind of scary because the vast scope of the logistics behind achieving their basic fundamental business, which is just delivery or just making an iPhone. I don't think people understand how vast. It's not just as simple as some guy shows up at your door and drops a package. It is so much more beyond that at that point. In fact, I was just watching a thing on Amazon yesterday about how they're pushing the drivers so much to an extent that's pressuring them into causing more accidents. And this is something that is obviously going to be replaced eventually by self-driving and robotics. I mean, that's just apparent, or even drones at some point for more remote deliveries. But I don't I just think it's scary at how intricate the system is and how like one little tweak could bring the whole thing down. And I mean, you're seeing this kind of scared this scared reality coming in with Apple. I mean, why do you think Apple vertically integrated chips? Why do you think Tesla's vertically integrating batteries? Why do you think everyone's trying to do their own stuff in house? Because in the future, and even right now, there's no way you could make it work. Try and get yourself an Nvidia chip or an Nvidia graphics card for less than $2,000 right now. Like you can't, because there's just so many supply constraints. So like these big companies are faced with the same headwinds, but at the same time, this is making them more foundationally stronger, right? But I'm always blown away by how Apple is able to bring the materials together to pull off every year all these iPhones and never have supply constraints. I mean, even Microsoft has had supply constraints. That's why they're raising the prices of their products, because no one can really get Xboxes because there's no graphics cards available and shit, right? Like it's a real reality that these companies are facing right now. EV infrastructure is going to be a large challenge to overcome in areas of Canada outside of major cities. How spread out we are will make it challenging to have viable EV charging networks. Yeah, I don't really care about the EV charging networks because at the end of the day, like this, so long as there's charging networks for long drives, the rest of it doesn't matter because you're going to be charging your car at home. I mean, my girlfriend's cousin drives a Tesla. I don't think she ever charges it at the charging station ever, because it's one of those things where like if you can get 400 or 500 miles of range, I would never drive that in a day. Like I don't know many people that are driving even 100 miles a day for that matter. So like if you're just joyriding all week, you get home at night just like you do with your phone. You're just gonna plug it in, and eventually I wouldn't be surprised if they just do over the air charging, because I mean that's another technology that's still trying to be forefronted too right now. With cars, it's a little more challenging. It's hard to take that much power through the airwaves, but I know that they're doing it with in your house, charge your remotes, your controllers, even your phone on a little pad. It's all just through the air, right? So I don't care about EV infrastructure charging network. I don't think that matters as much. And still, like what I don't understand with the EV charging network with Blink or even Tesla for that matter, it almost makes sense to me that like if you're installing a Tesla charging station at your house, why can't they include it in the app that if you want to make extra money on your charger, that people can't just pull up to your garage and on the outside of your garage there's the charger, plug it in, and maybe they make an extra few bucks and they pay for the hydro on your house, right? Like I'm surprised that's not something that's come into the whole idea of it yet, but that's probably because Tesla's so focused on building out the peaker plant problem, and they kind of want to get it so your car does that. So when you plug your car in at night, that it can actually feed the system as well as draw on the system. So I think they're more focused on that side of it rather than stupid little tweaks that would make life a little more convenient for long drivers where but that solves that problem immediately, right? Like I mean, when you think about it, like charging stations get packed up and people have to wait. So why not just make an app so I can go to the house down the road and the app says no one's on that charging station. I'm gonna book it. I'll be there in a minute. Boom, go plug it in. I feel like that's just like a 2-second app build, really. Yeah, iRobot is coming. Yeah, no, I mean, I swear that AI event was exactly like iRobot for Will Smith's 2004. I want to watch it again. Actually, maybe me and the girlfriend will watch it again tonight just to live in this weird parallel universe of like, holy shit, this is a reality that in the next 50 years, 100 years is going to hit us like a bag of bricks. Uber for EV charging, new business ideal. I think Uber's screwed. I don't like Uber at all anymore because they gave up their self-driving. I think that was Lyft. These companies. So this is why 90% of car companies are screwed, because they don't have AI or self-driving. It's simple. Look at Lucid Motors. Hyperchange just did a video on Lucid Motors, and that's the big competitor to Tesla. That's all the engineers from Tesla that are building out this new business model. And they just dropped the car. You can go look at it now. You can take it for a joyride. Yet the car doesn't have full self-driving, and it will never have full self-driving. They never plan on it being fully autonomous. They said that you'll never own the car with technology in it that will get to full full self-driving. And that's the same that is said for GM's vehicles. That has been so far the same said for Ford's vehicles. They mentioned that they'll have over-the-air updates like Tesla to make things a little better, but I don't hear them building out a multi-billion-dollar supercomputer to make that shit actually work. I mean, that's where people hit a brick wall and just don't understand. They just don't get it. They don't get Amazon's AI. They don't get what Microsoft is doing. Like, they just don't understand the scope. And they think that these companies are the same as Apple. They think all these companies are exactly the same, and they're not. And what they're doing is not easy. It is extraordinarily hard. And these tech companies are competing against each other. Anybody below them are ants that are going to get crushed. And I think Uber's going to be one of them. Business will be gone overnight the day that Google launches a huge fleet of self-driving vehicles, which unfortunately you can't buy a Google self-driving. You can't buy a GM full self-driving. You never will. For as long as it is right now, there's no way you'll ever buy a vehicle from GM or Google that they will state will be full self-driving in the future. Tesla is the only auto company right now. And again, people overlook that for some reason. It blows my mind. Are you planning to add Baba? You're playing the angels and devils on my shoulder, my guy, Rod. This is a constant debate I have right now for foreign exposure. Who knows? Maybe I add it in the growth portfolio. It's oh God, it's so attractive here, isn't it? If there's ever a tech company that also is fronting self-driving AI and that stuff, Baba, Tencent, and I've been debating on how to go about exposure to those companies, whether I do it through a total market index fund or if I just buy a couple of them offhand and take the ADR risk and the foreign political risk. Because, like I said, go watch Brandon Beavis and his dad argue, because they had really, really good both sides of like the bear bull case, because it's the angels and devils, man. It really is with that company right now, because man, that company is trading. Like, if I could own one business outright and not have to worry about politics being involved, it would be Baba. If I had to buy any company outright and I had the money to do it today, of everything, forget Tesla, for valuation standpoint, Baba 100%. Baba, Tencent, my God, those companies are crazy. And again, people don't realize how much Baba's integrated into like the global system at this point. Like, half the products you buy on Amazon are realistically coming from Alibaba at this point. Chinese company, they are a wild card, but they're not a wild card from a fundamental business standpoint. They're a wild card from a political standpoint. And you either believe one of two things. You either think China's out to screw the US markets, or you think that they're just trying to foundationally, get themselves concreted for what they want the future to be. I don't think they want to actually just see these values get eroded in these companies. I think they're just ripping a Band-Aid off. They want to try and find a baseline, and then they want to grow from there. And they just want to get the seed set right now, and they're willing to take a short-term loss for it. But I don't think China wants to destroy the ADR market. I think China wants foreign money. I really do. I don't think they just want to block off the US. I think they want the US dollars. I think they want as much money coming into their country, benefiting their society and their people as possible. So why would it make sense for China to destroy their own businesses? Like, it's so counterintuitive that it doesn't make any sense. And these are some of the arguments, obviously, Brandon and them get into. Toyota is a interesting company, being the largest best-selling car of all time, that I highly believe in the next 2 years will be surpassed by Tesla when these 2 new gigafactories get built. Which is the prediction. I think by 2025, Elon said that they will likely be the Model Y will be the best or the most selling car of every car company, and people still don't believe that. But I do, because Toyota, they're all legacy automakers, right? They're not tech companies. That's the problem. I think when you're comparing car companies, I think in the future, car companies are going to be like phone companies. They're going to be tech companies. I think putting 4 wheels on a frame, an idiot can do that today. I don't think it takes a genius to put a battery and 4 wheels and a motor on a frame, but that's not what makes, Tesla's a marvel, right? That's not what makes Toyota. I mean, like, in the future, if I really think that there's going to be an intersection between cars. Forget Tesla, even as Tesla's a point, but I think in the future, cars are going to go from being a liability to an asset. And I don't think people realize how fast that's coming. And if you are an auto company that doesn't know how to make your car add value to people's lives and just cost them value, like Dave Ramsey says, right? Like, the car is the biggest waste of money every single person will make as an investment, because it continually just goes down massively. And the day that switch happens where your car starts making you money, and actually, like, when you buy it, it'll make you more than its value is worth, that something fundamentally is going to change in a way that I just don't think people are prepared for. I think that is going to ruin more than half of the legacy automakers. I think they're going to disappear. Let's make a 2030 quote right now. I'll throw that one in there too. By 2030, I think that is when you'll start seeing the erosion of more than half of the legacy automakers, and Toyota included. I think those companies are struggling, just like MO. Actually, that is a great side by side comparison. MO and the auto companies sit in the same eroding business models. They are frantically trying to figure out what they can see today that in the next 5 years will pivot them to continue to sustain their value for their company. And I think it is terrifying. If I was an auto producer today on those boards, I would be shitting my pants, because you know the inevitability is coming, that if you do not innovate now, when you didn't innovate for the last 20 years when you could have, you're screwed. And it's pretty interesting. Sorry, I go on about this. I feel like we lose viewers over me ranting about Tesla too much. Americans owe China trillions. Yeah, this comes back to the point that China is so intertwined globally. All countries are intertwined globally. China goes down, we go down. You know, it's a fact of life at this point. Who is going to win the Canadian election? I don't like talking about politics. Personally, I don't mind talking about policy, because I don't like having opinions on people. I think it gets too the political conversation gets too degrading. Oh, I hate this guy. Fuck you. Or you like this guy. Fuck you. Like, it's so degrading. Like, let's talk policy. Aside from the person running, let's talk about what they plan on implementing and what makes sense and what doesn't. And I honestly don't like a lot of Trudeau's policies. I mean, he destroyed Alberta, which I did not agree with from an oil standpoint. That cost tons of jobs. However, at least, Canada's somewhat progressive on Bitcoin mining, so that's helping out a little bit. Maybe replace some of those jobs. But yeah, I don't know, man. Politics, God, politics, hard one. Do you also clone a super investor? If yes, is he or she? I don't clone anybody. I mean, look at my portfolio. Go take a photo of it and try and find one investor that has a similar portfolio. I doubt it exists. I highly, highly doubt it exists. Maybe on the Canadian side of the border, I feel like a lot of Canadians are probably on the same page that I am. Like, I want to own U.S. companies, but I also like Canadian companies. I like Canadian. I'm sure there's a lot of Canadian investors that might have similar portfolios, but I don't mimic anybody's portfolio. I might take stocks out of their portfolio, but I'm not mimicking Kathy Wood's portfolio. I'm not mimicking like actually the only thing I am mimicking is the S&P 500. Actually, that's literally what my portfolio mimics. So there's no individual investor. I just mimic the S&P, the top 10, because I think over 30% of my portfolio is weighted in Apple, Microsoft, Google, Facebook, and Tesla. And then for a little more growth, I got Bitcoin in there. And then just to stabilize that, I bought VOO. So between these 7 investments, they make up over 30% of my portfolio. But it has to be that way for me right now. I just can't see it being any other way right now. Have you checked any disruptive tech companies in 3D printing? 3D printing is going to be huge. I wouldn't be surprised by 2030 if 2030 if we're 3D printing buildings, and 3D printing everything in space, 3D printing everything. I just don't know what companies have the foothold. That is not where my experience lies. I've only got so much bandwidth here, folks, so I focus on 20 companies and I spend time on those companies. How do you think I figured out, that my opinion changed on MO? Like, I listen to the earnings calls and I look at the conferences, and I always check up on my companies periodically, maybe not even once a quarter. I might check up on them every half year or year, and just to make sure their businesses are still kind of in the same boat. Do you worry about the telecom sector if inflation hits, the interest rates increase? See, the thing with interest rates, that's the fear, right? Because a lot of these telecom and a lot of the utility sector, the real estate sector, are highly exposed to the interest rate market. But the cool thing about interest rates right now is that you can lock them in for like 20 years, right? So like a lot of these companies that have like a lot of debt, especially like telecom and infrastructure companies, I'm not really worried about it. Yeah, in the future when they want to grow, it's going to hinder their growth, because now that they need to raise capital. But luckily, I mean, when I look at a lot of these companies, they raise capital through share dilution. They try and do it in a way where they structure it to get the best value for that dollar. And sometimes share dilution makes sense. I know Telus just did a major share dilution, and a lot of people didn't agree with it, but I did. I was like, what an easy way to get some money. And, if it stops them from putting the company in debt, and yeah, it obviously dilutes us as shareholders, making it harder to grow the stock price. But, if it's going to foundationally stabilize the business because I own it for dividends, then I'm fine. HP makes the leading printers. Oh God, you're a big fan of dumb money, aren't you? You've been watching, what's his name there, maybe a little too much. Do you think the fourth wave could trigger a black swan event? If it does, it's not going to be like the one we witnessed. In fact, I don't think that. I mean, we're not in the same market we were a year ago. Like, there is no symmetry between what happened in March of 2020 and what's happening now at all. You cannot take the past rhymes. It does not repeat, right? March of 2020, what happened? Everything crashed, and then anything you bought speculative or tech based exploded. Anything basically in like medical fronts, really, when you're talking about things like Clorox, right? Skip to today, it looks like we're getting hit with a fourth wave. Our government's talking about doing lockdowns in October because kids can't get vaccinated. The US, I mean, there's speculation of lockdown state to state. Yet, what do we see happening in the market? Nothing like we did before. I mean, small caps are getting destroyed this time around. I mean, look at Clorox, for Christ's sakes. Like, that one blows my mind. That is literally the child of the pandemic. Like, that is the birth child of the pandemic, the cleaner of the pandemic. And they are trading at their friggin' 2019 levels after growing revenues by like $1 billion over 2020. So I mean, there is no symmetry here at all. So I don't want to invest off black swan events. You just kind of have to, if it happens, it happens. Don't try and gamble on it. I know you heard a lot of people made millions of dollars shorting the market in that black swan event, but those guys won the lottery. They're the outliers. And that could be you if you have that kind of risk tolerance. I don't. I'd rather just hold long term. And if that happens, and like if I was holding airlines, the crash happened, I'd be at the bottom with those airlines. I would have sold out. I would have just taken the loss, because the same with Buffett, right? Like, Buffett didn't give a crap. He sold out because fundamentally the business changed. So you kind of have to make sure you own the most recession proof stocks as possible. And then just, if something like that happens, just analyze, and just make sure, even though the stock price is down, that the fundamentals of the business are still robust enough to find some growth, or at least stabilize through these kind of markets. Go multi-jet fusion is the leader in the field. Seriously, I was in medical devices. Thoughts into the telehealth industry moving forward. Telehealth is huge. That's another reason I like TELUS a lot, because TELUS is highly leveraged in telehealth. TELUS is my favorite telecom company, by the way. I've looked at a lot of them. A lot of. My only favorite telecom company next to TELUS is American Towers. But American Towers doesn't pay a high enough yield for me to like it, so I could never buy it. But I don't like telecom at all. Telecom is like one of these legacy old companies. New management came in and screwed most of it up. I mean, Bell is having a hard time growing. I just like the management behind TELUS. TELUS is primarily internet, and yeah, they might have some disruption with Starlink, but Starlink isn't focused on inner city. Starlink is kind of like farm area, like outside of city, kind of focused for Wi-Fi based stuff. So I mean, I don't think they're going to lose on their 5G stuff. I think they're going to be great with that. They got security as a huge part of their business, like security cameras and building out like that kind of stuff for companies. They also got the telehealth side of it. So I love the way it gives you health exposure. I don't know too many telecom companies that actually have health exposure. So I mean, and it's growing. It's growing for them. So kudos. I like that company. It's expensive, but I like it. Do you own Visa or MasterCard? No, but I wish I did. I don't buy them because the dividend yield's too low. So like it's a tough debate, right? Because most of the companies that I look at buying, I'm kind of buying them for dividend yield. So I like J&J. I like those. I like trying to get between a 2.5% to 3% at the bare minimum. Um, you know, it's so hard, right? Because you got to remember, when I have a hard time even buying Apple or Microsoft today, because you can't look at them as dividend stocks anymore. When I bought them, you could, because I was capping them at a 2 to 5% yield, which is kind of staggering when you look at the dividends they're paying today. But when I look at Visa or MasterCard, like, I just don't understand the fintech space well enough, even though I obviously use MasterCard. It's pretty simple, basic business, right? But it's just, I don't know. It's never tickled my fancy enough to be like, hey, I got to own this. I wish I did, because it's been great, right? It's also like the NASDAQ. Like, it's crazy to me that every single person has to buy stocks through like Intercontinental Exchange. Actually, how are they doing? These are companies that are like fundamental to society, and yeah, they have kind of government regulations around how fast they can grow, because they're kind of capped out like the telecom industry. But like, how is the Intercontinental Exchange doing? Because most people don't even own the stock market; they buy the stocks on. When you own Robinhood, guess what? Robinhood still has to buy their stocks and operate through the New York Stock Exchange, right? So I mean, like, hell yeah, like, well, actually, I'm surprised the Intercontinental Exchange has been flatlining. It's only 3% this year. This was a company I was relatively interested in. I mean, it's got market average returns, 5 years, 110% return, so it's keeping up with the S&P. But those are companies that remind me a lot of like Visa. Like, they're really foundational companies. They grow at like market average. I think Visa's outpacing market average, is it not? I could be wrong. Let me look that up real quick. I'm really curious, actually, because when you're getting market average return, like, I'd rather get it out of a dividend stock, because I like to get paid out something. to some degree. Yeah. Okay. So like Visa's okay. No, Visa's doubled actually, or they're up 187% in the last 5 years. So yeah, they're definitely outpacing, but it's a Visa. One of those ones I should have bought for growth and didn't, like PayPal. What holdings do you have in your TFSA? So I update these every Friday. You guys can check out. My TFSA is primarily held between the poising of my TFSA is in Apple, Microsoft, and the VOO. Those are the largest holdings in the TFSA, and then it's subsetted with dividend stocks that I think are foundational, like Bank of Nova Scotia, Toronto Dominion Bank, Canadian Imperial Bank. I got my utilities in there, Algonquin Power. I've got Northland Power in there. I've also got Southern Company. I've got Stag, I've got MPW, so some of my REITs. I primarily just hold most of my dividend stocks in there. My TFSA I like is tax-free income because I don't have a full-time income, so it's a backup income for me. Are there any taxes that must be paid if I load my TFSA with QQQ? And as you might get taxed on some of the dividends. If it is, it's a withholding tax, but honestly, most companies are exempt from withholding. Like all my utilities are exempt from withholding. The only thing I actually pay withholding tax on is my REITs. That's it. I'm not sure how the indexes work with the withholding side of it, so you might get taxed that way. But honestly, when you sell it, you're 100% tax-free income. Either J&J and Pepsi just keep bipping higher. Looking at any stabilizers or positions, Kyle. I want more of both, but find it hard to buy at these prices. It's one of those things, man, where you kind of just got to bite the bullet, buy now, and if it drops, buy more. I mean, again, are you holding this thing for 2 years? See, this is the problem people have with Google, right, or Apple. They're like, oh god, 30 PE, and it's like J&J, yeah, it's getting expensive. But I mean, if you come back to me in 5 years and tell me it's expensive from what you paid today, I bet you won't be saying that. You just got to be patient, right? If you got a long enough time horizon, you're not looking to make all your money back tomorrow. So I mean, if it drops, buy more and just be patient. It's a foundational business, right? I ended up buying J&J after a bit of a dip after the talc powder ruling. Yeah, J&J is always under regulations all the time. I think they deal with it better than I think MO does because their investments tend to pay off a little better. Why are utilities exempt from withholding? I have no idea. That is a great question that I can't answer because I have been really confused by this actually because technically as a Canadian or a US citizen buying over the border companies, there's an agreement between the two governments that instead of charging you a 30% tax, because that was the initial tax, as a Canadian or US citizen, they will exempt that by 50%. So instead of paying the initial 30%, they only make you pay 15% on dividend income. Yet for some reason, there's companies that sit at a subcategory of companies where they're just exempt. I do not know why. That is, J&J, Pepsi, my utilities. I actually don't pay withholding tax on them when they pay out dividends, which I find really unusual. I'm glad they don't, but I don't know why. Thoughts on truly this MJ markets, man? I do not like MJ markets. I hate them. Worst market you'll ever be in. There's no patents. It's competitive as hell. You can't advertise. You can't market. TAT is a big sponsor lately for us, and TAT I think is my mom wants to buy it. TAT if you watch my videos on TAT, you'll see why I like them more than I like the MJ markets and the tobacco markets. TAT's found a ridiculous loophole in the tobacco and sin stock sector. Nicola, sadly, the current gov has never been favorable towards the TFSA in the sense they feel it's a vehicle only for the wealthy. What do you mean, Nicola? I don't know what you mean by at the start there, Nicola. Sadly, the current government has never been favorable towards. Yeah, no, they actually they could change some of the rules around how much contributions you can make, but take advantage now. Take it while it's going hot. Can you look at AQST? I can look up AQST. Maybe I'll just take a quick peek at the chart, and then I'm going to get out of here because I've been an hour deep, folks. Actually, if you want to continue the conversation, ironically, while I look this stock up, I just dropped a course on Teachable. I'm not promoting it heavy right now because I'm trying to build it out. Basically, I did a Canadian investing guide on how the TFSA works, how to build out your portfolio, take advantage of all these tax stuff. I teach you how to open up a corporate investment account like I have and take advantage of corporate investing because my God, the tax advantages from that are just absurd. Did you know that one Canadian corporation doesn't have to pay tax on the dividends that it pays to another Canadian corporation? You literally get free dividends if you own a corporation and then you own another corporation in your corporate investment account. like oh my god, the benefits you get are absurd. So you're taking a look at here at Aquestive Therapeutics Inc. Actually, I think I've heard of this one. This obviously sits in the small cap sector. It's getting destroyed with the rest of them. I'll take a look at this one because I think I remember this one coming up. I don't want to do too much research and bore people out here, but yeah, folks, I added a little thing. Hey, if you want, the links in the description below, folks, you can come join me. You get my WhatsApp number. We can continue talking 24/7, 7 days a week. It's $100. I know it's a little expensive, but I'm going to keep adding to it, and you get to learn how to make free Bitcoin. You get to learn all the platforms I use for Bitcoin. I go in really in depth from the Canadian side of the border, which I don't think there's a lot of courses on out there. So feel free to buy that. Like I said, I know it's $100. It's a lot, but goddamn, I put a lot of work into that, and it's taken me a long time to get to this point, and I think you'll get value out of it because I'll skip you to the front of the line like I did with my girlfriend. My girlfriend, she won the lottery last March when I made her open up an investment account because you got to recognize when things are good, right? Thanks for the live stream, man. I appreciate that, Shamir. Yeah, I love doing these. I'm going to try and consistently do these every Sunday. I kind of enjoy these kind of just train of these fluid, like just this train of consciousness thing going on with you guys because you guys are actually really engaging. It keeps the conversation neat. So stay cool, stay awesome, folks, and I'll catch you next week. Peace.